The CEO of the biggest bank in the world, JP Morgan, is talking about cockroaches. So last week, Jamie Dimon came out with a little comment that said, where there's one cockroach, there are many more. Now, I don't want to keep talking about bugs because it's a bit icky. But what he was talking about basically is the corporate credit market in the US. So we know that we've recently seen one big bankruptcy, which is Tricolor. And this company basically had its tentacles in many different places and in many different banks. So, what's happening in the private credit market? There are fears that this might not be one and done. And that's what he meant by his comment that where there is one, there could be more. Now, I can completely disagree with his theory. Especially a lot of the regional smaller banks started to give out credit to many of the bigger companies, but not putting a lot of guardrails or risk triggers in place. In the banking world, we call these covenants. And many of these credits have been covenant light, which means when things go belly up, there isn't an early warning signal or trigger that could tell us that this company may be in trouble and we should call back our loan. How does this translate into the stock market? So, where we're concerned, we don't think that this could have a major impact on the stock market because even if there is a bit of a contagion, they are concentrated among lower credit borrowers. The big banks are doing fine. Yes, they took a bit of a hit, but nothing compared to the size of their balance sheet. And then when we look at the stock market in general, it's being led higher by big tech. Now, most of these big tech companies are AAA credit rated. That gives us some comfort. So, could we see more pullbacks? Yes, we could. But I think some de risking and some pullbacks are healthy for the market. This doesn't mean that the market will crash. Let's also not forget that we have the Fed cutting rates, and that actually gives a positive boost for economic conditions.